Hello guys, glad to have you on board again. Today we keep on going with that educational series about grade A projects in the top 10, and of course, full disclosure, all the projects that I'll cover are the projects that I trade. I am not an analyst, and there is a kind of an ethical line that I'm not willing to ever cross. I talk about the things which I have skin in the game on, okay? I definitely never will talk about projects that I don't trade, okay? Though, of course, that means the list of projects that I'll cover are non-exhaustive. You can definitely, and you definitely have to do your own research anyhow and anyway, but most importantly, you can follow the process of my own way to reviewing a project to do it on your own favorite ones. Like, for example, Polkadots, I'm not going to cover. AVAX, I've done it for the French guys, but I'm not going to do it for you. So this is basically all about it, okay? Phantom or whatever projects you may like. Understand that the current market's maturity, terminating the first cycle of bull trend, means that the networks that will support growth are probably already there. The question is, what's next to come? So let's talk about Solana in terms of how did we get there, what's the kind of motive for the projects, what is the disruption, what is the vision for the future. Well, let's bring it to the story of Solana up to date and what I intend to think about the future. Okay, so Solana, the way we've done for the previous ones, we look at Messari, very well documented stuff, very great, and that gives us a sign of comparison. So this is real fun. Okay, the funding round that there is for Solana has been rising over the course of 2 years, and it is pretty odd compared to the other ones. Remember that what we've seen under the grade A projects is generally a public and a private sale all going on in parallel. Though not the case in here. 5 raisings in here all over the course of 2 years. So this is kind of the conventional way of raising capital for companies. Or innovative companies and tech companies in general, multiple seed rounds and Series A. So, well, I can say that this is not the classical ICO type of stuff. So this is not the crypto way of doing things. This is more like the conventional way of raising capital through venture capitalists and stuff like that. So it smells money immediately. It smells like the good old finance system, but once again, people don't like it. Those who are in the crypto want a revolution. They want to just drop everything that is Wall Street related or whatever. We're going to kill these guys to bring the better world. No, it's not going to be that. Remember, it's always going to be kind of a hybrid system that we're going to end up with. So be happy to have the finance behind that. I like that. Like I said, when it smells the money and when it smells the good old guys, that also means that if there is disruptive technology on top of it, this is what I like. Okay, so pretty great. Like I said, first thing, smells like money. Okay, the token distribution, very great in here as well. Sorry. Okay, here it is, 25% for the founders and the projects. So we're pretty much in line with what I think is fair distribution of tokens or something. 37% to the investors who've been given us, who've been given $25 million to the projects, and pre-mined rewards and airdrops for 38% of it. So kind of ecosystem reward over time, investors and founders. Pretty damn very fair kind of distribution. So once again, professionals are behind it, and I can see it, but I like it. Once again, professionals know the shit they're talking about. So here is, oh boy, I don't understand what the fuck they've done in here. So this is pretty unconventional kind of way. So I know that the VCs were behind that, but I don't know whoever have left that thing, has let that thing happen. Boy, this is real concern to me. The fact that there was huge capacity to over-liquidify the market by oversupplying it all around January of 2021. And of course, this has been raising a lot of concerns about the fact that, well, Solana better have to be something, otherwise everyone's going to dump in the shitheads and they're going to lose a lot of money. So we'll see that on the chart, that it definitely didn't happen, but that was hell of a risk to take. I would say, of course, lucky for everyone, Solana was a good project, but if it was a rug pull, well boy, this could have been hell of the biggest rug pull ever. So, very dangerous, and I don't understand what the fuck has going on with this. Still, we'll see that in the end, when we look at the price and the history of it, that it turned out not to be the thing that people thought it would be. But still, big danger in here. I don't know who's been putting that supply curve, but boy, this was damn dangerous for investors to jump in before January 2021. Okay, then comes the Genesis accounts. Pretty transparent at that level. I like that. The projects that do not give us the supply and the initial block distribution is very dangerous. But in here, we have transparency. So you can track all of the accounts and stuff like that. Okay, good stuff with here. I also like the fact that there has been some transparency reports. Yeah, okay. So transparency reports all across 2020. Okay, this is for the year 2020. Okay, well, the other thing is that therefore I do not really like the fact that there are no longer transparency reports, but we also need to account to the fact that if you read through those reports and all of the communication that is made by the company, because I like the fact that they're not 100% transparent, but they do like and they do try to make efforts on this. Very great. In terms of transparency, Cosmos is definitely going to beat everyone, so there's no questions asked. I think that looking at some kind of financial like I say, it smells finance, okay? It smells like Wall Street around it. So in that perspective, I like the fact that they're making lots of improvements in terms of transparency. So it's not perfect, definitely not perfect, but it's great at all. At least it's great. Okay, then if we dive into the project deeper, I like this, to the fact that some studies have been rising and following all of the accounts, which I normally do myself. But in here, this is dated, I think, of July 2021, so we do not have the full thing and the full data, but still, that means over the first years, okay, of development. This is what I do when I study the token supply and the use of tokens made by the company. I try to figure out what the fuck they've been doing with the money. So in here, this is great because they have disclosed these things. So here it is. They've been burning approximately half of it, okay? Out of the 25 million, 12 millions were burned at the for second semester of last year. So still probably a lot more money burned until then, but still we'll see that lots of things have happened till then. Okay, so out of the global general expenses, okay, boy, 70% for dev and team. Great. That means the rest is, of course, legal expenses and lots of the things that are general expenses that you cannot avoid. But boy, 70% for the team and dev. I like it. These guys build. And this is what I want. So the money is not spent on shitty marketing bullshit or whatever. They do the job and the job sells all by itself. Great, great, great. I mean, you see, this is double thumbs up for this. This is exactly what I like to see in a company. Not expending or expenses to communicate or development funds or whatever shit that is. This is really building the shit and it's going to sell itself. Okay. Then if we jump in a bit, sorry, all of my things have to reload. I don't know why. So this is community stuff, Idzoia or whatever. I kind of like the thing. This is real great because it saved me a lot of time to study the initial distribution and its evolution over time, because they've been listing all of the interesting accounts. They also have listed all of the staked locked accounts, and on the rich list we have the full detail of everything, which are the staked locked accounts, where are exchanges accounts, foundation funds, the incinerator. All of these things are very, very well displayed. Saved me a lot of time to track all of the rich assets actions. But we'll see at the end. Everything correlates to what I've seen on the charts anyway. So I just got the confirmation that I wanted. But once again, having confirmation by the data is always better than just following suspicions. Okay, so good point in here in terms of global asset allocation and its evolution and transparency over time. I could verify all of the feelings and sentiments that I had when I looked at the chart. So real good point. We'll see all about that later. Here is what I liked Solana at the first sight. This is really, 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 really love at first sight. Some fellow trader that I know has brought my attention to this thing. So I haven't discovered Solana all by myself. Someone that I know and I trust on has basically brought it to me. So I kind of made my initial digging into this. And oh boy, of course, just like everyone who came to this project, initially have a knowledge of finance, immediately understood the immense and tremendous value that there is behind that innovative stuff. So remember what happened back then? There was this kind of thing in which Ethereum came in. Everyone understood how programmable money could do some things in the future. But still, lots of the devs back then, in the 2017 era, were basically trying to figure out how the heck to get out of proof of work currencies, and there was already a lot of talks about proof of stakes and innovative proof of stakes and stuff like that. So they've been doing something with the proof of stake mechanism, but more importantly, okay, like AVAX has been doing some kind of subsampling, and we're going to talk about that, but they have done something way smarter than that. What they've done is, I don't know, but the CEO itself describes himself as being in a bar and somehow having the bulb moment in which it basically had the idea, the magic idea, and it just got back home and started coding. So this is real great because, well, what it brought us is very smart. I like these guys who think outside the box. Everything is all around the SHA algorithm, the hashing algorithm. I'll make a series of vulgarizing videos, but probably not necessarily on my channel, about this thing and how these hashing algorithms, coupled with a very smart way of dual public and private key system and encryption system, has brought us to where we are today in a secure, untraceable consensus, or fully traceable consensus, in which by using these encryption algorithms we'll be able to sign transaction with anonymity, with still being able to have full transparency of all these things that happen. Well, though, understand it that way. I'll make an entire series of video about these things and how we've generated what is likely going to be a massive consensus revolution that is not just related to cryptocurrencies, okay? Cryptocurrencies is just one of much deeper revolutions that will come down the road. And I'm not talking about a shitty metaverse or whatever, okay? We'll see all about that, but there's lots of things to unpack regarding this. So this guy, out of this and the regular way it's been used, like I said, the hashing function and the public and private key stuff has been bringing the entire cryptocurrency world to where it is today. Though this guy has taken the core, the heart of it, and somehow decided to think outside the box to get something genius. And he finally managed to do something. Because what is brought up is very smart. No one was thinking about that back then. To think of it, the blockchains work with people sending transactions to kind of a memory pool in which all of the validators receive the same transaction inflow, and they take the one that pays the most. I mean, on some token economics, and they basically pull this one into a transaction block, okay, which is timestamped or whatever, and hashed toward the next one, and we create blocks after blocks. You know the thing about blockchains. I hope you do, okay? There's kind of a mempool situation. What this guy said is, we're gonna spam a shitload of SHA algorithms that will have only one interest in doing is timestamping. Basically, we're going to SHA in repeat. We're going to create very quick hash of incoming transaction, and we're just going to note one thing. We're going to give them a transaction idea, just a basic message of it, just a transaction ID, the message of the transaction, and we're going to timestamp it. Meaning that we're going to say, okay, I've received that message at that time, and then we're going to put it into some kind of generic mempool to be dealt with by all of the validators in the network. But the first thing we do is when we receive the transaction, before putting it in kind of a wait list like everyone else, we're just going to put it into a wait list with a timestamp, so we know in which order things have happened. And this changes a lot of things, because whoever's ever worked in finance or anything related to finance knows that time's of the essence. Time is crucial. It's key. And if you understand how other blockchains works as state machines, they create a block. When the block is finalized, it creates a state of the blockchain at a time. And then, of course, the next blocks create the next state of the machine and so on, okay? And transactions finality can be expressed over time when we use proof of works, or can be instant if we have some way of proof of stakes that will mitigate the risks. But still, you understand that these are state machines. We execute code until the next state is in. This is not the case for Solana. Solana timestamps everything that comes in. It is processed through blocks, but we know in which order to process the blocks. There is a timestamp included by these massively quickly introduced SHA repeated algorithms. Real great, real smart, because once again, no one was doing such a thing. And when I saw this, I immediately understood what we could do with it. We're going to see it later. Okay, move on. So, of course, in terms of scalability, we were facing the same old problems. Blockchains that want to go fast will compute a shitload of data, and we need to figure out some way, some elegant kind of way in order to use the computation power that we have today in order to make it as efficient as possible. So they've definitely been going on through a very important stuff, which is using Moore's law, saying that as there is more complex demand around computing systems over the latest decades have been very, very rapidly increasing their stakes at making cheaper and smaller transistors or whatever. We've increased the capacity of computation by a double each and every 2 years. So this is massive stuff, creating, of course, log scale progressions in this sector. So they basically have started with this, okay? We will probably have to require more transactions over time, but we're also probably going to be able to handle more computation power over time. So things should somehow turn out to balance. So we're going to basically structure all of our thing to the most efficient potential of computation system. And they have been spreading it to make it the basics. If you don't know anything about computers, well, we'll see all about that. But kernel is one way in which we can process some kind of transaction. CPU and GPU have two different ways to work out. And this is great because they've mapped all of their transactional process through all of these different computation systems. This is real great. All of this is a computer, basically. A computer has a kernel, CPU, and GPU, but basically they're using all of the computation power in the modern computer systems. So, real smart thing. We know that someone behind that knows this shit about computers. No shit, Sherlock, just look at the background of the founders. But still, the other thing was the blockchain trilemma, the same old problem that AVAX has tried to solve with Avalanche Consensus, which is no more than the same shit that's happening in here. So no revolution out there, it's just the easiest way that's been found to compensate for the high bandwidth required to bring more validator on board. So there's the PBFT system, which is basically we're going to limit the set of validators. We've talked about that in the Cosmos review. So the way that Cosmos has been using to get out of it is by multiplying the sets of validator, by bringing basically validating as a service into multiple security blockchains that will extend indefinitely or horizontally, so there is infinite horizontal scaling by still having 120 validators kind of blockchains which will lend their security. And as the network requires more complex security levels, these things will scale horizontally. So this is not the same approach, because in here we're layer one system, so this is definitely the vertical way of doing things. We want to process transactional throughput. We want to create the big channels, okay? We're not in horizontal scaling maximal output like it is in Cosmos. Though consider that Solana is just pretty much like AVAX. They wanted to do better than ETH to be able to have their spot as layer one alternative potential. So they've had to figure out some kind of their own problem out of the trilemma, the blockchain trilemma. So in order to increase transactional throughput without sacrificing security or decentralization, they had to find their way out. So what they've done is, just like pretty much AVAX has been doing as well, is by subsampling the network, meaning that all of the transactions are not processed by all the validators, or basically all the validators do not necessarily communicate with every other validator. They have kind of a neighborhood system, which is no more than the same old thing that AVAX has done, which is local propagations of blocks. So AVAX has a different way of doing things. In here, they use neighborhood and they communicate between neighborhood until they reach out some kind of a mathematical consensus. So this is kind of safe in terms of consensus, mathematically proven. And as we saw the other day, there is no better security or whatever in terms of networks. All of these networks have definitely very high standards of security, and they're unbreachable in terms of security of the consensus. Okay, so what Solana has done with all of this, okay, so technical breakthrough in terms of timestamping the data, and of course solving partially, but still solving the blockchain trilemma, meaning that they've been able to process crazy throughput. Well, this chart says it all by itself. We're in log fucking scale, okay? Very log scale. So here is where Ethereum is. Of course, all of the Ethereum layer 2 solutions will figure that out over time, but still, Binance Smart Chain disruptions by bringing the PBFT with instant finality and a very limited set of validators to have very quick block time and high transaction throughput. So this is the only way that Binance has found with the existing technologies to figure out higher throughput. They sacrificed centralization, but of course, like we said, this is no problem with the security. That still means that, boy, as long as the network runs, it just is as secure as everyone. We'll do a video about Binance. Anyway, but Solana has solved its way, like we said, in order to have high transactional throughput. They have made subsampling of the validator set. So this is no big deal by neighboring the distribution of blocks and the validation process of blocks. They have timestamps the things, which means they can take as many transactions as they can process. So this is basically a matter of CPU, not CPU, GPU, and kernel kind of computation capacity thing. So over time, as the Moore's law create faster computers, normally Solana will be able to process more transactions proportionally. Okay, so the scaling solution for Solana is both the technical stuff behind the computer system and, of course, technical improvements on the blockchain itself. They can definitely make it better also or somewhat. Okay, so very good point for Solana. That makes it the killer of transactions in this network. Absolutely beating everyone. This is crazy shit. Okay. So lots of transactions. I mean, this is 4 times what Binance has done. So you have to understand how big this thing is in terms of transactional speed. Still, what I like in here is everything aligns in here. We still have the same old story. I like the fact that there is kind of good data provided by the different community explorer stuff, like SolanaBitch is doing a great job. I like the fact that they're not trying to hide the problems of it. Concentration of validation power is definitely there. That means it takes 19 validators in this big 1,500 set of validator to get to what they call the super minority. So this is basically meaning that if they want to stop the network from running efficient level of consensus belief, it requires more than 31%, than 33% of the network, and that could be achieved if there were 19 malicious nodes. So one thing that you have to understand in here is the centralization problem. If we were looking at, for example, AVAX, most of the top validators are the fucking company itself. So huge problem of centralizations of power in AVAX. I've reviewed it for the French guys. I'm not going to do it for you, but huge problem of power distribution. In here, it takes 19 persons who do not talk to each other or do not have any malicious intentions in the network. They have to collude to be able to produce falsified block. And once again, understand that the consensus itself is 100% transparent and secure, which means everyone can process transactions, not just these guys. But the thing is that they may be able to cheat on one block, but everyone else will be able to see it. And if there's ever someone being able to collude the network that way, meaning if for some reason, hypothetically, these 19 guys were to corrupt the blockchain, everyone else would see it, which means immediate loss of consensus belief in these guys. They will be immediately removed from the consensus and will never be able to validate any blockchain ever again. So these guys have a lot of money to make. We'll make an entire video set about validators and their economy, though we'll explain how this is absolutely not going to happen. But still, I like the fact that they do not try to hide that. There is a bit of power concentration in the network, divided to the fact that there is still good points to say that this is decentralized by 1,500 active validators. But the thing is that, of course, just 19 of them takes it over. So we'll see all about that. What I like with this thing, this is what I like. The staking APY returns are exactly what I think is where they should be for a legitimate ETH competitor. Okay, it's not going to bring down ETH. We said it. It's definitely not the same business model, and I'll explain everything about that later. It's not an ETH killer, never has meant to be, and never has tried to be. I've never seen the CEO talking about ETH and how ETH is whatever or this. This is what I hear Emin talking about all the time. Emin is all about ETH. ETH is doing this, is doing this. We're going to do better. Okay, no bullshit like AVAX. They're definitely doing it great. This is where I want the yield for the legitimate ETH competitors to be. ETH over time will likely stabilize over 3 to 4%. This is going to be the safest yield around there. This means this is going to be the highest ever damage blockchain market cap. But I'll explain that in a separate validator video. But understand that as a legitimate ETH competitor, I want these competitors to stabilize between 5 to 7%. Let's say 5.5 to 7.5%. So this is definitely where they are. So once again, everything aligns. I know that the guys behind that thing are professionals because they're doing everything exactly the way they should be. Okay, next, if we look at SolanaBitch as the dashboard, I like the thing because, once again, same old story in here. I know that line absolutely, it is the money line, the way I call it. This is the money cycle. This is where the money is transacting in this world. I'm sorry to say it, but of course, this is where the poor countries are. This is where the money circulates, okay? So China, Europe, USA. So you can see where the validators are. This is a money blockchain. This is a money stuff. It smells money everywhere, from the token supply to the token distribution to the way of rising funds to the guys behind it. VC everywhere. This is great. Once again, people hate VC, but I don't understand it. VC means professionals of finance. We're talking about a disruptive finance. So fuck, you definitely want these guys on board. Like I said, you're not going to end up with a perfect world with this. We're going to end up with a hybrid system in between the system that is shitty and that is existing today and the system that we'll get tomorrow, okay? It's going to be a hybridized version of it. So finance has its fingers into this thing, and that's great. Money is circulating through these hubs, so we definitely want to have the validators there as well. The way the blockchain function is this, okay? So we've got 400 millisecond blocks with sub blocks produced, okay? And there is transaction finality by the end of these blocks. But of course, as the blockchain is still beta, mainnet beta, there are some things that have to be said about it. We'll talk about that. In terms of transactional throughput, we had 2,700 transactions per second. But this is not like peak transactions per second. This is happening all the time, okay? So 58 billion transactions in the blockchain today. Big problem about the blockchain size. So they had to solve this problem immediately, and they had to figure it out very quick. What I like is that when they were pressured over time, once again, money is behind that, so they have very well been advised about it. They've chosen quite of an elegant solution, which is going for externalizing the blockchain data to Arweave, which is basically making the blockchain cut out, and the data is stored in a decentralized way, so there's no big deal with security, but still that is externalizing portion of the security. So Solana is the victim of its own success. It had to find solution to the immediate adoption it received, even though this is still a fucking beta. This is incredible, okay? So of course we'll talk about the negative sides of it. There's been lots of problems with Solanas. This is definitely not perfect, but what I like with the fact is that, boy, they know about it. They know it's not perfect, and they're not trying to hide from it, and I like that. Transparency and being rational over what you do not, what are your forces, what are your pros and cons. These are definitely rational mindset in here, and I love that all the way around it. Okay, so this blockchain explorer is very great, and once again still proves the same old theories that I had all across the thing. This is just coming along the way as well. Solana has been rising an additional staggering $300 million in mid last year. So pretty much when the latest release of their expenses have been set, and when they've been spending half of it, they've been rising like way more than that, 10 times the initial amounts for this. Oh boy. So now they are in a swimming pool of money. They definitely do not lack of money, and this is definitely the same old thing. Venture capitals have been putting that money in here. Basically, why did this happen? Solana was at that point, half of last year, crawling out of use cases. Everyone was willing to jump in. Tremendous growth in their DeFi ecosystem, but not all about it. Lots of things were happening out there. And of course, it had risen a lot of problems. In order to solve those problems, money needed to be around the corner. They've been probably burning everything they had left in the pocket from the initial sales and rounds. So I think they've rapidly gone out to venture capitalists to say, boys, we've got something that is very demanded, though we need money. And they have done quite a lot of money. In here, I would say they probably have taken a bit too much money, but boy, it's hard to say, and I couldn't figure out any numbers. So I would say the same old thing. Professionals are behind it, and I think pros know the shit they're doing. Like I said, this is really the same old finance world that is colluding in here because they see the value that there is, the disruption value. The Wall Street guy, the smart ones of Wall Street, they know that these things is exactly what's going to kill them. So they put their fingers into it. This is absolutely understandable. If you know that you're going to be disrupted by something, you want to at least be part of it, okay? Like I said, transition will be all about it. The dumb ones of the old world who are stupid enough to think that they will survive it will die. And of course, those who will be smart enough to adapt will be able to get through it, but they're going to have to pass through the revolution process, okay? So this is real big thing. They've been raising a lot of money. So now they definitely have flooded with cash. They can do whatever they want. So I think that looking at the huge goals that there's going to be until they get to full release of a mainnet out of beta, well, there are lots of problems to solve. Now at least they have the money to do such a thing, to hire people and so on. Okay, if we look at the Solana Explorer itself, we can see that, yeah, the data is still pretty consistent. No problem with that. We can look at this thing if you want to. The supply is buggy at the moment. I'm sorry, I wish I could see it, but this is the same old story. We've seen it anyway. Okay, in terms of roadmap now, what the heck is doing Solana? Well, like we said, the major problem I have is that the mainnet launch was announced in Q2 2020, and basically, oh boy, we are Q1 2022 and we're still mainnet beta. So there is kind of a problem with the roadmap. But like I said, they're going public with this. There's no hiding to the fact that they've encountered lots of problems that weren't there when they've written the initial white paper or whatever. And I like that. Once again, problems are generally coming along the way when a good project comes along. So this is definitely all about it. They adapt to the situation and they are transparently communicating with the public, saying that we have something that is over-demanded. We never thought it would be that case. There's going to be glitches, and therefore we want to be honest with you guys, be safe, try to be rational. This is still mainnet beta, meaning it works, but it could be glitchy. And it's exactly what happened. Okay, we'll see all about that later. In terms of ecosystem growth, I said it, we can compare it to other guys, okay? Everything in Solana is Solana related. Not an ETH killer, never wanted to be, never communicate around that. People, dumb people, thought it would be an ETH killer for those who weren't digging below the surface. Everything in Solana is non-EVM compatible, so they do not try to suck in the Ethereum DeFi like others have done, like the Binance Smart Chain or Avalanche or whatever. No compatibility with EVM. They can be transcripts, so they can help you writing in their own language. But boy, Solana is all about Solana, okay? All of the things that they have are this. And if you have a look and dive deep into at least the two first ones, you'll immediately understand what Solana is all about that others can do. These things, just look at these dexes, okay? Serum and Radium. You'll immediately understand what the shit is all about. It's all about goodbye Wall Street. These things have targets. The number one targets of Solana is this immediate fast transaction finality. And the thing is that most importantly, it's also very secure, still decentralized, even though we've seen there is relative collusion if 19 persons could somehow stop the blockchain, but it's not going to happen. We'll see all about that. So the major problem for Solana is the one that we'll uncover later. But the real use case of Solana is to fuck up Wall Street. These guys have ambition, but they're already nearly there. Look at the products these guys pull out. You've got exchanges, you've got market depth, you've got everything there is to basically totally destroy centralized exchange. Either that is Binance for cryptos, could definitely be replaced by Serum or Radiums, but the thing is that Wall Street alike could be totally fucked up with such kinds of transactional throughput and most importantly, time stamping. This is what Wall Street wants. They want to be the first one. Time is of the essence in the market. Those who act faster will have bigger rewards. And that is Wall Street's business plan all along. If I'm the first one to send my transaction, I'm going to be ahead of others in the tape. This is Wall Street's business. So it is understandable that every guy in Wall Street saw immediate potential in Solana, an immediate breakthrough in this consistent SHA algorithm encryption that tells who's gone first. This is absolutely crucial for Wall Street. So this guy, they're going to take down Wall Street. I am very confident about it. It's going to take years, but it's a more efficient, more transparent system than the one we have today. The New York Stock Exchange, the Eurex Exchange, all of these things are big data centers hidden behind the floors or whatever. This is doing the same thing in a decentralized manner. it's probably going to take over someday. So I think the New York Stock Exchange and stock exchanges in general will likely occur in a decentralized way and probably on Solana. So big financing here. We're talking about millions, not to say billions of transactions to be held in here. So this is definitely a big deal. I think finance, okay, the finance system, the way it is today, mostly exchanges and stock exchanges or derivative exchanges, this is very likely going to show up in Solana. So huge growth potential in here because there's still a lot of money to come. Okay, next. This one doesn't work. Sorry about it. Okay, first problem with the AVAX army, that they've been raising some questions. I hate AVAX for many reasons, but this is one of them. The AVAX guys just can't stand in their fucking spots. They have to talk about others, so they shouldn't mind their own business and their own shit. But this guy came along and say, okay, Avalanche has immediate transaction finality. Solana is lying. They are lying because it is 21 to 46 seconds when they say it's 400 milliseconds. So it gives away the methodology. I give you guys the time to read that bullshit. It's absolute crap. To be honest, because of course the explanation is straightforward. Some of DeFi protocols that have been tested in here know that this is fucking mainnet beta. So they have increased transaction finality so that they can actually make sure that the funds don't get lost if for some reason there were some problems in the immediate transaction throughputs that there is. So the immediate validation of the transactions in the blockchain is each and every 400 fucking milliseconds. But as it is a mainnet beta, those who are smart enough understand that there could be underlying risks, so they've been putting additional delay for transaction finality to avoid funds being lost or whatever shit that is. So security first, and once again, I like it. But you folks at AVAX, you should shut your fucking mouth and be smarter than that. Okay, so Solana, in terms of development, is about the leaders. As you can see, 4 people are standing out the globe. Of course, Bitcoin is its own lifespan, but Solana is about the winners in here. So in terms of growth in the development ecosystem, real great. Of course, the growth is very fast, so I'm pretty concerned about is it going to be sustained or is it going to be just a thing of the past if it turns out to decrease over time? I don't think. I think Solana has definitely its own pool of validators and its own pool of developers as well, due to the fact that it has its own ecosystem, and we've seen it through multiple factors. So I'm not concerned about the fact that the dev retention of Solana would be, even if we have a bear market, it's probably going to keep rising. As you can see, it's the same thing that happened for ETH. Even though the bear market occurred, the guys were still there. So I think Solana anyway is going to be there to last because it has absolutely breakthrough kind of technology, and I always made it free, made it public. I like this blockchain because it has definitely easy to see use cases and disruptive territory, and it has nothing to do with big boy Ethereum. ETH is not and has nothing to envy to Solana. They're fighting in 2 different battles in here, and they can be definitely stronger brothers actually. So I would say, yeah, Solana is the very fast and strong little brother of ETH that's never going to try to kill ETH because, I mean, they're brothers. They know they can help each other. Not the same thing with all the bullshit in here that we're going to talk eventually later. Okay, of course, problems, and we're going to have to solve them, and this means this is the reason why they've been raising a lot of money, because they have a lot of problem. Actual crazy demand on the mainnet beta means there are some problems. Outage have been multiple, and they have been raising a lot of concerns, but we'll see that prices necessarily didn't really tank out of it. But the thing is that, yeah, Solana's actual problems are due to a couple of factors. The first one is being through the actual business model of this company, which is we want to be the fastest ever, so we can process crazy shit ton of transactions on a regular basis, 2.7K transactions per second. Boys, this is incredibly much bigger than anyone else out there. But the thing is that lots of actual Solana transactions are what we call vote transactions. I think this is visible through here. Okay, so I'll let you dive into this, but vote and non-vote transactions have a different thing. So lots of the 2,000 transactions Solana has are not necessarily real transactions. They are kind of subset of transactions. So I'll let you figure out what these things are. I do not have the appropriate amount of time to dive in. But understand this, okay? The problem is that they process a shitload of transactions, okay? And the thing is that these transactions are very cheap. So that creates a delta, which is very dangerous for spamming. This is basically the easiest way to attack Solana, is to spam the network. It's going to cost you a bit of money because you still have to pay for the transaction fees. But if you spam the network, if you basically overload this constant regular SHA algorithm loop, which is basically timestamping all of the incoming transactions before they get processed by the validators, okay? So if you send way too many transactions, what you're going to do is you're going to increase the CPU usage of the validators until they crack down. So when there's too much use of the network, which is done intentionally, like DDoS attacks or whatever, this is not regular types of transaction use cases. This is someone voluntarily spamming the network with coordinated attacks. Though in that perspective, they brought down the blockchain. But does that mean the tech is bad? No, I don't think. I think one thing is for sure is that, well, there are vulnerabilities that can easily be fixed. So we can see it in multiple of these entry sources for Solana, whether that is the explorers or whatever. They've been putting DDoS, anti-DDoS kind of techniques everywhere. So Solana is probably going to solve these issues that way. And I can be damn sure that out of 2022 roadmaps, they're very likely going to start scaling horizontally, meaning that they're going to start sharding at some point or doing some kinds of shards so that if one network is targeted, the other ones will keep working. I don't know exactly how they will process these things, but of course, Solana has its fair share of attacks, and lots of people have been coming along with it. But what I like with the company is that they have remained very clear about it. There are problems, and there probably will be other ones. So be smart. Don't try to put too much leverage on your positions or whatever. Be ready to absorb external factors of risk. And once again, I like that. That means these are finance guys behind it. They're not trying to hide against false lies or whatever. They're not trying to bring down Big Brother. They're just trying to understand that this is a complex ecosystem. And if you want to be part of it durably, you have to work the way it is. You build yourself friendships in the network, you build yourself a community of users, and I think out of all these things that a good company has to do in order to compete in this very, very competitive system, I think Solana has pretty much thumbs up on almost every of them. There are some problems, like I said, but we need to look at prices now to try figuring the story of this thing. So as we said, January 2021 was a crucial moment. This is where all of the initial token supply has been distributed in a very, very strange way. So this could have been the massive, biggest ever dump of institutional money in front of faces of retail investors, but somehow didn't happen. We've kind of created a range. Let me zoom out a bit so you guys can see this one. Okay, so range, initial range. I like it. I don't like the projects that bang, we immediately go up and we flush out the speculative money afterwards. So this is not it, okay? Take the time of range, on-sui range, mainnet launch, okay? We've got the release, and as you can see, no crash. This is a good project, so it better had to be. Okay, gone up, which means some people took some profits, but it's been rapidly bought out by some other people. We build the top of the range and we break out of it. So very, very good pattern in here. Once again, professionals are behind that. I know how these guys works. I know how these guys think, and I see them everywhere in here. These are pros that knows how to handle risk management. In here, these are just them taking partial profits to cover for their initial risk taking of venture capitalists. So this is pretty normal. The biggest volume of Solana is this day. This is where most traders took their partial profits, but the demand was immediately there for those who didn't got the ICO. They got in and bought at that point. Okay, second set of volume shows in here. Oh boy, very interesting. When they start to taking a bit more profit, where is there? Oh, $4, $16. Oh boy, I know these ratios. This is where they're getting to 100 to 200x returns over the ICO prices. So they start to lock on the gains. Classical VC behavior. They do not try to think about how good the company is or whatever. They're getting to the ratios that they know about, so they're profit take because that's their business fucking model. But they partial profit take less than the initial thing, which means they see the value, so they still take a bit of profits because they took some risks and they have to take rewards, but they still let a lot of the money in. Okay, next spike of volume comes right in here. This is where they probably have started testing the market's absorption, and the market still takes on it. Then they finally start taking a bit more profits. We can see that this is where first notable action is. This is where they started to say, okay, might be a little bit too expensive now, we're going to take some profits. They take the profits off the table, and this time demand is not there to meet them, so we enter correction territory. And of course, in here is where the entire market gone bearish. This is where I personally heard a lot about Solana, and I've made a couple of entries. The first one is in here, and all of my other big entries were there. So first trade in this area, second right in here, okay? Got myself a nice exposition to Solana because I got them like these things. So here's where I got in late but got in still. This is where I got in hard, buying the dips in latest summer. So this is where this was all about. Lots of demand, even though the smart money took their profits at the market top and neglected the price action, it still recovered. Of course, this is one of the assets that took on that correction territory, one of the best. It's been still correcting for more than 50% because everyone got hit hard during last summer, but still, absolutely good symmetrical triangle. As you can see, classical structure of volume, meaning that the demand still outweighs the supply. So of course, over time, the bear market, so stuff, whatever, the bearish sentiment is pulled out, and rapidly limited supply, huge demand means we've got rising volume with a rising price. Boy, I like it. But still, this is where it got concerning. We got right back to the same volume. So here is my job to uncover these tracks. So I know these are the same guys who took their profits back then, who started to massively profit take in here again. Okay, here is where they think the price is too high. Okay, though $200, massive, massive, massive level for the pros. This is where they thought, okay, it's too big. This is creating some kind of a pullback, and of course the retail crowd buys the shit afterwards. $250 is where I locked most of my gains on Solana. So have I done a good speculative job? Boy, yes. This is my job, to see these things. So when I see the market and when I time it precisely, and I've done a perfect job on Solana, means one thing: those who control prices are guys like me, pros. Okay, so of course professionals do trade Avalanche, do trade Solana, and I like that. Okay, so there's one thing, of course, that I don't like, is that the recent bear market wrong footing structure, no matter however you want to call it, normally should have consolidated itself around the $120 level, which it did not. So we broke below and now try to build a resistance. Of course, just like the rest of the crypto market, I think it's emotional reaction and that we're going to recover that level, but still, that's a message. Okay, so understand it the way it is. We over bearish, so we try to find some bearish sentiment. Volume is pulling right back in now, so I expect another spike of volume that will be new investments. Probably the guys who sold there will buy again here, but I think they're going to sell again. Okay, so we're going to be rational with this. What is the roadmap for Solana in 2022? Well, it's very limited. Like we said, I think horizontal scaling is going to start to avoid blockchain interruptions by possibly doing some kind of sharding, even though I don't think sharding is going to be the actual way of doing things, because boy, these guys at Solana, they like to think outside the box. So I think they're going to take sharding and break it to make something innovative eventually. If they do such a thing, boy, I'm really curious to see how they do it, because they're very, very, very smart guys. Though I'm very curious about the horizontal scaling solution Solana will bring in, but until then, well, they have to do it. So I'm not going to buy just out of nothing, okay? So understand that, of course, the way this brutal move has been done to the downside means we are not bear market, which just shifted the value to absolutely stupid territory. It was too expensive in here, now it's way too cheap. So what are the most rational structures out of this is, okay, very simple to say. We're going to build a range, and looking at the structure, I've heard them say that this is going to be neutral range. I will bet on symmetrical triangle to be the likeliest outcome for Solana. In terms of technicals, okay? One another thing I can tell you for sure, prices were too expensive back then in here as well, before the massive demand showed up half of last year. This is where they've been rising 300 million capital. So those guys who took profits, I've seen that some other guys were willing to jump in with even bigger types of money. So they stopped selling and their prices got there. Here are the crucial levels. If you ever think that we're going to go back to $50, it's not going to happen. So I know where to put my stop losses on Solana. We'll never get back there. At least that's what I think. So this is where I think problems are to be rising for this blockchain. If we go back there, that means the VCs are changing their mind and looking at how much they control the supply. Boy, you definitely don't want them pissed off. But I don't think they are. I think they're pretty happy with Solana. There are some problems, so they're spreading the FUDs on the blockchain's not working. DDoS attacks pull it down, so this is very dangerous, whatever. Okay, of course, classical FUD for the bullshitters. This thing is probably grade A cryptocurrency, absolute disruption. I think this is where there has been as much innovation as possible in 2021. And of course, there are lots of innovation elsewhere, but I think Solana has topped up its innovation. I think it could come out with some kind of smart way of sharding the blockchains, but well, I'm not going to bet just on this. So I'm buying cheap, I'm selling expensive, and I'm not going to make it overcomplicated, this smart plan for 2022. I think Solana has made it. I think the trend is mature. I think what's left for Solana is a big range in 2022. But that's not the whole story. Like I said, I think Solana has topped up for 2022. I don't think we're going to go all-time highs again. If we do, it's probably going to be short-lived. But does that mean I'm done with Solana? Well, I'm definitely not. Solana has been transferred. At least portion of my investment, at least 5% of my capital will always be in Solana. Okay, so when Solana gets too expensive, I profit take and I buy again anytime we retrace down to cheaper prices. I want to get always at least 5% of Solana in my portfolio, and I'll do everything I have to maintain that as it is. Okay? So if Solana goes up too fast, then I profit take and I reaccumulate on the supports. I don't think there is any value move to be made by Solana this year, but I think once it gets scaled up, meaning that all of the problems are solved, if we get a mainnet, and if we somehow figure out the price dilution and all of these things, meaning that the smart money who bought low will have to profit take. And I definitely can tell you for sure that $200 is going to be the area in which they're going to work around that year. So here's my plan. Okay, anytime we get out there, closer to 200 is where they're going to profit take. They did it last year and they do it again. Anytime we're going to go too cheap, meaning too close to the supports we know now, everyone's going to buy now. So I think the likeliest outcome is to go back up in 2 sets of waves. And I don't think Solana is going to be a huge gainer this year. It has been the #1 cryptocurrency last year. It's hardly going to be the case in 2022. But once we've matured that big range, and I think it's going to mature over weekly chart time frames, so it's going to take some time. I don't know anything about the range structure or whatever. All I know is that this is expensive, I profit take. This is cheap, I buy. And in that in that structure that is. And I always maintain exposition to this blockchain anyway, because it's very disruptive and it can surprise you at any given time. So don't sell everything in here to buy everything again. Don't be dumb enough to do it. Always have Solana in a portfolio, I think, is definitely the way to do it. But disruptions aside, okay, I think it's going to range. I don't think there's any more value to be added in 2022, but to keep on scaling and maintaining cheap transactions, meaning that, boy, there's no more to make. Don't forget that there is still 5 to 7% passive returns over staking on the network. So this is still one thing. Prices don't move, but you still take 7% of safe returns a year. That's one way to put it, okay? So think about it. And I definitely think that by the end of 2022 or 2023, I don't know, it's a matter of cycles, but once we got a mature range, when we break out of this range, then we'll be able to be massively trending again. So Solana, not my favorite for 2022, but definitely one that I'll keep anyway, but one of my favorite for the course of the next 5 years. I have Solana in the portfolio in the long run because there is a lot more money to make with this thing when it will really start to take over on Wall Street, not just bringing up the tech to eventually do it someday. When the day that motive starts to pull itself in motion, billions, I really say billions of dollars will transit through these blockchains and these dexes, and it will just be the beginning of the end of Wall Street centralized. Wall Street will go decentralized because Wall Streets are innovative guys. They follow innovations. Lots of them, the old guys of Wall Street, will try to fight against and go for the SEC to say that this is this problem or whatever. But most of them would just be smart enough to understand that they have to move with the flow. They will join the party. And when the flow started, all of the Wall Street guys will flood in very rapidly. So this is the reason why I don't know when they'll show up. I think they will, and I think they will rapidly do it. So I definitely want to have constant exposition to Solana. Not crazy exposition, and I'm certainly never going to buy at the top of that range. Profit take, and if we retrace, I buy again, and so on. And until we manage to sufficiently break, like I said, we could make all-time highs, but I'm not going to gas myself for breakout trades or whatever. I think we need to mature the range. We need to build a support. We need to maintain prices above $50, but I think we're hardly going to be able to pass through 200. Here's my plan for 2022 on Solana. Definitely a big project, but I hope now you know everything about it. The business model, the communication of the company are very straightforward. Everything aligns all together. I like when everything is like that. There is there are some concerns. It's not perfect, and I like that they're not trying to hide their shit. They know what they're good at, they know what they're bad at, but they're going to try to make themselves better out of what they can't solve now. They're going to solve the problems over time, and they're going to make the best of what they have, and they're going to make the best out of what they do best already. This timestamping stuff is a revolution. Probably no one really understands the value of it, but anyone who is working closer or related to finance in general, which is my case, knows that this is a massive breakthrough, technological breakthrough. It will take time to ripple off its effects. This is why I will always have Solana in my portfolio. That's not even a question. Some of my souls will never be sold. Even if the blockchain goes to $20 a token, I don't pay attention to prices. I see tremendous value in this asset. That doesn't mean I'm buying at any prices. I keep the tokens that I had last year. Meaning that if you have tokens below $50, these are the tokens you really want to hold. Okay, so to put it plain simple, those tokens that I had back then, which I profit took out of there, I took a profit taking around $100 as well. So I took 2 profit takings, okay? This money that I took off, I have put it back in. Okay, the rest that I had back then has been transferred in a long-term portfolio, and I'm not going to sell them ever again. Meaning that the bottoms that I bought, and I made my first entry in here, so I bought one in here and the other day right there. So in that perspective, these are my 2 re-entries on this market. Okay, these are associated with invalidation if we were ever to dip below $40K, $40, 50 bucks a piece. But still, that also means that everything that I have there, even if we were going below, will never be sold anytime. Okay, these are staking rewards that I take. This is from a passive investment strategy. I'll explain everything about it when we'll make the specific video about validators. Well, boy, 55 minutes. It's a long shot, but now I understand. I hope you understand what Solana is, what its actual target is. No DeFi shit Sherlock trying to kill ETH. It's definitely competing with Wall Street, and there are billions to come when this thing will prove to be more reliable than the shadow banking system we have today. Okay, enough for today, guys.